Alright then guys, welcome back once again to another video. This will be a trade breakdown basically. I'll be letting you know about my perspective of the trade which I took, the idea behind the trade and why I took it. Since it was a no news Monday, right? We have all the red folder news at the end of the week. I risked not 1% but less than that. You can say 0.7% or something, right? And my target was 5 RR. So 5 risk to reward using the TCISD model. Shout out to Bucko Trades once again. So let's begin with the video, right? It'll be a short, concise video for you all. Number one, on the 1 hour time frame, since there was a geopolitical news regarding the US-China trade, we had the market open up with a gap, right? And the moment a market or anything, any other asset class opens up with such a major gap, we know that the gap has to be filled back in, right? So we have two ideas in the beginning. Either we trade the move towards the filling of the gap, or we can trade away after the gap has been filled. We have two options, right? Option one is you trade towards the filling of the gap. Option two is you trade once the gap has been filled. So this gives you two biases, right? One is bearish, another one is bullish. Bearish one has to be taken with utmost care, and the bullish one you can risk higher once you have a crack in correlation, right? Because you are in a bullish gap, bullish opening gap, right? So my idea was my whole approach towards the market was I want to short towards the filling or the opening of the gap, right? So I knew that since we had no news, we will not be filling the gap completely in one single candle, right? Or one single day. Like it's gonna take a lot of time. So I wanted to get in and get out, taking my profit without wasting time or without wasting my psychological energy, since it was just Monday, right? So my target was this low, right there, this low and this rejection block basically, because this rejection block is the catalyst for the move higher, and this is a very lackluster, lethargic move towards the highs, right? Or not the highs actually, towards this rejection block, right? So this is the 1 hour time frame. I'll just take you guys step by step to the lower time frames and you will understand my perspective what happened, and it's very easy to understand and very comprehensive. I go to the 6 hour time frame. The first thing I do is once you know the 2 a.m. candle begins, I go to the 6 hour candle time frame to look at any cracks in correlation which are clear. It becomes clear to me because every single 6 hour candle, it represents a session. So this is the Asian session, this is the London session, and this is the New York session, right? And in this trade, I took the RTY. I took the Russell 2000 trade. I shorted this one instead of this one, instead of YM, right? So on the 6 hour time frame, we have the London high here and London high on the YM. 6 a.m. opens up. This is the 6 a.m. candle. We trade higher, we form a failure swing over here while we form a sweep of liquidity or turtle soup, anything which you want to call it, on the 6 a.m. candle. So we have this one, an accumulation candle, right? And this one is the expansion candle. So you have to trade the expansions. You always have to trade the expansions. Me particularly, I didn't trade this, right? Because it was just cleaner in this one, in RTY, and I have my reasons. So over here you see on the 15-minute time frame, it's much more clear. So here we have a soup, here we have a swing, a failure swing. So this is the lower time frame scenario. Here we had a turtle soup. This was much weaker basically, and this was, sorry, here we had a failure swing and here we had a turtle soup. This pair was weak, this pair was stronger. I usually trade the pair which takes out or sweeps the liquidity, usually, right? Like mostly 80% I trade the setup which takes out the liquidity or turtle soups. Why? Because it gives me much clearer price action in order for me to place my stop loss. Because if I put my stop loss here and if I put my stop loss in this trade, I'm confused between which lows to take. I'm not confused, basically. It just gives me over here gives me more confidence, whether here it gives me less confidence. And then this is quicker to trade while this has to catch up, right? If there is a strength switch over here, I'll usually take the higher one. Now let's put some lipstick on the 15-minute time frame. Okay, I know all these lines might be confusing, but just be with me in this and focus on the opening prices, true opens, and the opening prices of the sessions. Look how the opening, as I've made some notes over here, notice how we still have an open objective on RTY. You can see this. So as long as you have an open objective, you see, this is important. If we didn't have this, for example, in this candle, if we took out this low and then we form a daily cycle over here, this would become low probability. And this is something which all of us miss, a lot of us miss. And this is something which I found out, that if you do not have an open objective, a clear open objective, no amount of crack and correlation will be able to deliver price over there. And number two, notice how true opens are being attraction and repulsion areas. Like prices, they opened here, moved up, came back down, right, changing the state of delivery over here, moved back up into the opening price of the day, and then down towards creating what? Generation of liquidity or engineering of liquidity, this low. And then we are moving back up again towards creation of another true open, meaning the true day open. Once the true day open has been created, since it's in the middle of the range from this high and this low, the true open of the day has to seek and generate liquidity up at the highs, right? It cannot directly sweep liquidity. It needs to seek premium prices if it has to go short. It needs to seek discounted prices if it has to go long. So true opens are the catalyst for seeking higher or lower liquidity, or engineering lower or higher liquidity, right? So we opened up here. You see how price is just wobbling around here. It's indecisive. Of course, it's not indecisive. It's just there for us to get confused. You can see this low here gets swept into this fair value gap, right? I don't think this was touched over here. So this fair value gap was left open. We trade higher, right? And I guess there was somewhere here the true London open, but I'm not focused on the London open because I took the trade in the New York session. Moving forward, we had this high at the opening price, and price, you can see, is not closing above here. You see, this one close does not actually specify or make it eligible for price to go higher. It does not do that. Why? Because we have the other pair as well. So once we tap into the opening prices and we do not have a crack in correlation here, this is invalid, this opening and the closing of this candle above this high. What we do is then we start to accumulate orders over here at the opening price. You can see how it's being respected over here. We move down back into the true day open, right? Since the true day open has been tapped, right, it has to seek liquidity once again. If it has to go lower, it will seek higher liquidity. Where is the higher liquidity? This high, right? So this is the London high. We move higher. We open New York here. Open, low, and close. So there is no wick at the high. So this one, right, this one particular candle, this aligned with this true open. So both the true opens forcing price to seek liquidity higher and becoming a daily cycle sequential SMT above the opening price of the day, right? Immediately we form a true CISD 15-minute. I should have taken the trade here, but it would have like made my stop loss, my RR very smaller, right? It would have been a 2.5 or 3 RR trade, while I took a 1.5, 1:5 RR trade. So what I decided was, after this slide I'll show you. So daily cycle has already been confirmed by the TCISD. Let's move on to the lower time frame. So the 5-minute time frame, if you go to the 1 hour, right, you should always go and reflect on this video and go and back test yourself. So this is the TCISD, the 15-minute time frame. But around here, if you'll go on the 1 hour time frame, you'll see that we had a CSD, or change in the state of delivery, on the 1 hour time frame as well. Okay, so if you have a 1 hour time frame, change in the state of delivery. If you have a 15-minute time frame, true CISD, and we move and open up the 7:30 over here, right? 7:30 opens up, price moves lower. A lot of people would have been short here, but we had to wait till price is tapped into a PD array, which is the true CISD. Once we tap in this true CISD, we make immediately, you can see we make a CSD, a change in the state of delivery over here, aligned with the true opening of New York. This makes it even sweeter. Why? Because we have this low, and this low hanging down here as a low hanging fruit. So I didn't take any partials. I directly took my exit here, right? So I placed my entry at this change in the state of delivery, put my stops at the highs. But now, something which I want to mention about rejection blocks here. You see this candle and this candle, right? How price came into this one, right, into this wick being the rejection block, right, and the bodies of this candle, price came into it, wicked the 50% of the wick, and then delivered lower. My entry was here, using the theory and the idea behind the trade and the execution. So this was my execution. This is, I guess, 1 minute time frame, right? 7:30. You see how price came back up towards my stop loss, but I didn't move my stop loss. I didn't do anything at all. I kept it as it is, even though I was fearing that my stop loss will be hit. See, we cannot hide the emotion that, oh my god, my stop loss is going to get hit. In the developing stages of our journey, we cannot hide our emotions. We have to accept it. Yes, I feel the fear, but I also have accepted the consequences of me taking this trade. And, it is what it is. So I knew I waited for the 1 hour CISD, change in the state of delivery, as well as the M5 CISD to form from that 1 hour CISD. As I've mentioned before, that was exactly at the 7:30 open. True opens give me more confidences, confidence about what? About price expanding away from the true openings, right? So this is something which I add to my model. So true opens give me more confidence, as I know price will expand away from the true open towards an open liquidity pool. Where was the open liquidity pool? The low of, which was hanging right there at the bottom, at the opening of the gap. And if I will see the same trade again, I will take the same trade again. If it's like this, I'll take it again and I'll share it with you guys. And if I hit a stop loss like this, I'll not like this, of course. If I hit a stop loss, I'll also share with you guys on my Telegram. And you can copy the same steps to look at the charts and execute with confidence like this, right? So you can go back to this video, watch it again. What was my idea? What was my bias? What confirmed my bias and what confirmed my entry, right? So if you enjoyed the video, please subscribe to the channel, join the link in the description, which is my Telegram group, and I'll see you in the next video. Until next time, guys.